Happy New Year and welcome back to Ghana Ground Up. We're very excited to kick off season 2 with today's episode as we gear up for what's coming through the year. Now, we remain your go to podcast for all things real estate, so do well to subscribe to the channel and share with everyone because, in the end, we all can't ignore the issue of having a home. Today, we're tackling a question I get often. How do I save for my first home without going broke? A more relatable form of this question takes this form. How can I save to buy a property when I don't have a big salary? Well, owning a home is one of the biggest milestones in life. It's such a big thing and a big dream for all of us, or at least so many of us, especially here in Ghana, where real estate often symbolizes stability and success. And more like you've arrived, you're a big man or you're a big woman if you have your own house. But let's face it, with rising property prices and everyday expenses going up, it can feel quite overwhelming to save for that first property. And even the thought of it can stress you out. But then, don't worry, there's good news. The good news is that regardless of how tough it may seem, there is or are ways to get it done without losing your mind or your wallet. So we've got some tips to get you through, and they are quite practical and very easy to follow. But then there's a catch. You must be ready to be disciplined and totally committed to see this work. So if you're ready, let's dive in. And wait a minute, even if you're not ready, come along. You may change your mind halfway in. So then, let's dive in. First things first, you need to know your target. How much money do you need? But even prior to that, how do you get an idea of how much money you need? You need to find that out by doing your research, and you can't save effectively if you don't have a clear target. So you need to research the average cost of properties in the areas you're interested in. And for example, for a peri-urban area like Kaswa, you can have a three-bedroom house going for about 500,000 Ghana cedis and up. But then for a more prime area like East Legon, that same three-bedroom house can cost you at least 4 million Ghana cedis. It's a lot of money, and so it's really important to know what areas you're interested in, and that can inform the prices that you can expect. But wait, there's more. It's not just the purchase price you need to think about. Don't forget additional costs like legal fees, property taxes, insurance, and other costs that will come up over time. Just don't make the mistake of assuming that the listing price of the property is the only cost you need to deal with. So then there's always more. And if you think you need, let's say, 1,000 Ghana cedis, you probably need at least 1,500 Ghana cedis. Just saying. Once you've done your homework and you've figured out how much you really need, write this number down. Put it somewhere where it will be, at a place where it's in your face, a place where you can see it every day, just to serve as a reminder so that you have it at the back of your mind that the goal you set for yourself is a very big goal, it's huge, and also an unforgiving goal. So then you can't afford to slack. But then don't let this figure simply be a reminder, let it push you to take action. Now that you have an idea of the cost of your desired property, what's next? You need to create a dedicated savings plan. Now that you know your target, you have to create a plan to get there. Now, this isn't something you can leave to chance and hope for the best. It doesn't work like that. Now, this is a very big deal. It's a huge undertaking, and so you need to have a structure in place or a system in place if you're going to have any meaningful and tangible results. So, number one, you want to open a savings account dedicated to this course. Now, this will be your home or your house fund, and do well to keep it very separate from your regular savings, just so that you're not tempted to dip into it for other expenses. So, keep it out of sight and then keep yourself safe. Number two, you need to automate your savings, and you can do this by setting up a standing order with your bank so that a fixed amount from an existing account is transferred into your home fund every month. Loin des yeux, loin du cœur. Out of sight, out of mind. Number three, regarding how much you end up saving, consider starting with a percentage of your earnings that you can handle. Even if it's just 10% of your monthly income, well, I think that is good enough because in the end, consistency is key. I understand that properties are expensive, but then you may have a little financial strength for now. So then be realistic with what you have, and don't go saving, let's say, 50% of your salary if you are going to literally be living paycheck to paycheck. Start with something you can manage and work it up. Again, consistency is key. Now, here's a little tip. Look for banks or financial institutions that offer high interest savings accounts. Now, in as much as you're saving, you also want to let your money work for you while you're working towards your goal. Beyond getting your savings right, you've also got to cut costs without compromising. Now, the fact that you're saving for a home doesn't mean that you have to stop living your life or give up everything you enjoy. You just need to be smart about your spending. Now, you know your lifestyle and you know what works for you. You also know what you can live without. So then, I wouldn't try to be a financial coach and ask you to cut down on eating out, or maybe go take Trusky instead of Uber, or even cut down on your Netflix subscriptions and all that. You know yourself and you know what's up. So then I'll leave that to you to figure out for yourself. A quick tip is that you may want to track your expenses for, let's say, a month. You'll be really amazed about how much money you're spending on things that don't really matter or things that you don't really need. So then try and cut the waste and save what you salvage. Moving on, you may want to explore cooperative schemes as a channel of home ownership. I bet many people haven't heard of housing cooperatives, even though it's a very fantastic option. Now, basically, cooperative housing schemes pull resources together from members to acquire properties at lower costs. Think of it like teamwork for home ownership. Since it's probably a relatively new topic to many, I would like to just take a moment to break it down. So, follow closely so you get a drift, because you can easily get lost with this one. Now, so a housing cooperative is a type of residential community where the residents own and manage the housing complex collectively. Now, they own it together, so then no one person owns a unit, even though that's possible along the line. So, you can think of it like living in an apartment complex and you and your neighbors own the entire complex. It's some form of democratic ownership, where residents have a say in how your community or the housing complex is run. So members own shares in the cooperative and not necessarily individual units in the property. I hope you understand. So as a group, you own the apartment complex together, and it's not like just you having your own portion to yourself. So you may ask, how do housing cooperatives get money to buy properties? First of all, they raise money from contributions from members. Secondly, the cooperative can take a loan or mortgage on the property they're buying, where the property becomes the collateral. Now, some cooperatives may end up raising funds through other channels, but then in the end, it's all dependent on how the cooperative is run and what they choose to settle for. But then the cooperatives typically repay their loans or mortgages through a series or a combination of different payment terms. Number one, we have something we call monthly carrying charges, which is basically regular payments made by each member of the cooperative. And apart from paying off the loans that are on the property, the payments made by the members also go to cover, let's say, the property taxes, insurance, maintenance of the property, and other costs that may come up. Now, there might be cases where the cooperative may put special levies on the members apart from the monthly payments they make, just to offset the loan or the mortgage that is on the property, and get all this cleared out very, very quickly. From my research, I was pleasantly surprised to find out that this concept of housing cooperatives is not new to Ghana. It has been in operation for some time, in fact, some decades back, and it's very interesting to know that there are projects that exist today that have functioned and are blossoming fully based on this concept of housing cooperatives. So I'll do well to update you more on what I find and what other housing cooperatives are there that you may be interested in. I hope you get a concept of housing cooperatives, and if this sounds like something you'd be interested in, you can start by researching if there's a cooperative in your area or in the area that you're keen on. So you may want to attend their meetings, ask questions, get clarity, and make sure they are registered with the right authorities. Now, this can be a great way for you to get your foot in the door, especially if you're open to new projects or community-style housing projects. Either way, it's a great opportunity for you to explore, so then get researching. Housing cooperatives and affordable housing seem like a perfect marriage to me, but then let's leave that for another day. Anyways, one more tip, and this is more of a reminder. Do well to invest your savings. Don't let the money in your account just sit idle. Put it to work, make it work for you. So you may want to consider some low-risk financial products like treasury bills, mutual funds, and fixed deposits. The idea is to make your money work for you, so then by the time you're done and you're ready to buy a property, you'll have made more money than what you initially started with and what you've saved over time. Saving for a home is no small feat, but then it's absolutely achievable. That's with the right plan and with discipline. So start small, stay consistent, and remember, every CD you save gets you closer to your dream. If you found today's episode helpful, please do well to share it with someone who is also interested or already on the journey to home ownership. Do well to subscribe to the channel. I'm Desmond Kafui, and this has been Ghana Ground Up. Once again, Happy New Year, and until next time, let's build our dreams together, one break at a time. See you on the next episode of Ghana Ground Up.